greatest bull runs in American history from 1998-ish through 2001-ish. The company that had the best run was who? You'll never guess it. I just like to, it's comical to me. Sears. Okay? Not Amazon, not eBay, not Apple, not Microsoft. Sears. How did Sears make money during that time? Not through the catalog, not through the tire shop, not through selling clothes. Credit. Okay? Sears offers you a little credit card. People did what? People didn't pay it off. So they did what? Made a bunch of interest. Alright? So, one of the ways that we can always tell how people make money is through their financial statements. Okay? Now, I'm gonna step on your toes a little bit probably, so listen up. If you are an accounting major, alright? And get out of, this is real skill stuff. Alright? A lot of you who are not accounting majors are never going to do steps 1 through 7 in the accounting cycle. Okay? And I get that. You're here to get out and go do marketing or whatever. I get it. Alright? Financial statements, what we're about to talk about in chapter 4. Okay? If you are not an accounting major, I guarantee you, at some point in your life, you are going to deal with financial statements. Okay? I'll give you a little example. I don't like to talk, a lot of personal stuff because it bores you, but it relates. All right. I sat on a board. This is a company. Nancy Anderson and I, who also teaches in the School of Business, sat on the board. This company is losing money like crazy, just bleeding money out. All right. They walk in the board meeting, ask the management to leave. Somebody proposes that we give raises to all the managers. Okay? We get down to it, we talk about it, we get to a vote. There's about 21 people on this board. And they say, all right, we're going to do this? We're not going to do it. 19 people raise their hand. Let's give them raises. 2 people, Nancy Anderson and I, are sitting around like, we're either the smartest people in the room or the biggest idiots in the room. We're not sure which one. Okay? And she looked at me and said, are we the only people that can read a financial statement? These people are losing a lot of money. And we just gave them a raise for bad men. It didn't make any sense. Okay? Well, you had a bunch of people in the room who didn't know how to read a financial statement. Your church, non-profit organizations. Some of you, believe it or not, are going to sit on corporate boards one day. I know, all right? Weird, all right? You're going to sit on boards for little civic organizations. You may have to deal with financial statements for charities that you help out. You are going to run into financial statements at some point. Okay? So, if you can I know it's very hard to separate grade from class. Okay? But focus on skill. This is a skill that you can have. This is a skill that you can add to a resume. Alright? Not a lot of people out there know how to read financial statements. People that you think should be able to read a financial statement cannot read financial statements. Alright? So, that's where we're going. Alright? You accounting majors, the best thing you can do is learn some economics. Okay? I can't tell you how many people I run across who know accounting that don't know a hill of beans about economics. Alright? Finance majors, the best thing you can do is learn some accounting. Alright? What are you going to be doing as a finance major? Anybody? Is that anybody? Anybody thinking about it? Okay, we'll tell your friends. If you're thinking about being in finance, what are they going to be doing? Analyzing financial statements. What are we about to do? Put the darn things together. Alright? So if you can put them together, you can definitely what? You can definitely interpret them. Okay? Economics people or social science people, whatever the case may be, the best thing you can do is have some skill to go along with your advanced brain. Okay? There are a lot of people that can think. There are a few people who can do. Alright? Who do employers want? It's a lot easier to teach a doer than to motivate a thinker. Ever heard that one? Okay? That's what we want. We want doers. Okay? So, have some skill behind that intellectual muscle that you have. All right? So, this is where we are, all right? We're putting together financial statements. We've done all the hard work. All the accountants, if that's not you, they've done their thing. They've journalized, they've posted the ledger, they've created all these trial balances, and here we are, okay? We've done the unadjusted trial balance. We got there. We did all of our adjustments. We got supplies right. We got prepaid insurance right. We got unearned rent right. We got everything right, all right? We created an adjusted trial balance, okay? And creating the adjusted trial balance is if you can put yourself in the shoes of an immigrant coming over to the United States. You are looking at the Statue of Liberty, okay? But you are not a citizen yet. It's all in front of you, all right? You got to go through the process. So here you are. You sit on the boat. All the hard work is done. You survive the sail over. All you got to do is walk through the line and put together the financial statements, all right? So, before we start, I told you from day one in here, there are 5 broad account categories. They are what? Start at rewind. All right, I told you from day one when you walked in here, there are 5 broad account categories. They are, your turn, asset, liability, equity, revenue, expense. All right? 3 of those, asset, liability, equity, go on the balance sheet. Revenue and expenses go where? Income statement. All right? Now, we've got to learn an order, okay? An order at this point in the game is important, okay? I will tell you when an accounting book is just being an accounting book and saying, do this just to do this. You know, order is important at this point, all right? Income statement first, all right? Income statement first. So when you get your exam and you're looking at an adjusted trial balance and I say, put the financial statements together, income statement first, statement of owner's equity second, balance sheet third. Always, okay? Income statement first, statement of owner's equity second, balance sheet third. All right, so here's what I need you to do. Turn with me to page number 192. 192.
Holy crap.
And while you're getting there, let me explain to you what you're looking at. All right, because we haven't seen this exact form yet. This is new to you. All right. So what I hope you're looking at is a version of an Excel spreadsheet. You see it? That's what they're going for here. They're trying to be all techno-savvy. We can't tell you to get laptops because people freak out about that. So they're trying to put an Excel spreadsheet here in front. You with me? Okay? We good? We all use Excel. We're okay. All right, it's a grid, A, B. All right, good. All right. In column A, all right, is a list of accounts. You should be familiar with all these accounts. There shouldn't be any real surprises. You should know which of the 5 categories these accounts flow into at this point. I look through here. I don't think there's anything that you can't handle or should not have been introduced to at this point. So there are all your accounts right there. Columns B and C. All right, so scoot out a couple columns. Columns B and C is unadjusted trial balance. Okay, which is what? That's test number 1, remember. We did what? We did our journal entries, posted to a ledger. From the ledger, we created the unadjusted trial. So that's column B and C. So column B and C is what you did on test number 1. Column D and E are your adjusting entries. Okay, and you have not seen this form yet. So let me take just a second to kind of explain what's going on. In the debit and credit column, under the this is column D and E adjustments. For example, you see in parentheses letter A next to accounts receivable, A 4,400, and then in the credit side you see letter A with a credit to fees earned for 4,400. Okay? If we're really on top of it, what we can tell by looking at this is that we had an entry where we debited accounts receivable and credited fees earned. If we're really on top of it, we know that's accrued revenue. All right? So what they're doing is they're taking those journal entries that we did from chapter 3, okay, and they're presenting them in a little bit different way. So you're going to have one A in the debit column and 1A in the credit column, the offset. There's 1B, 1C in both columns all the way down. And it looks like there are G adjusting entries. So you can kind of get the idea there. Then in columns F and G, you got what? The adjusted trial balance. So what they do, they took the unadjusted trial balance, mixed in the adjustments, and created this adjusted trial balance, which is what we did last time we were in here. We created an adjusted trial balance. Okay? So once you get to the adjusted trial balance, everything sort of stops. Okay? You kind of breathe. All the entries are in at this point that need to be in for financial statements, and we start putting things together. So if you look at instruction number 1, it says, prepare an income statement for the year ended July 31. Now, use what you know at this point. Alright? You know what? When you read income statement, 2 types of accounts are going on that income statement. They are revenue and expense. Okay? So this can be real easy if we go down through here, back to column A, alright, where you see your list of accounts. You go down here until you run into a revenue account. Remember how our trial balances are arranged. Assets, liability, equity, revenue, expense. Alright? So I'm tracking down here until I find a revenue account. And there it is on line 22, fees earned. Right? Okay? We've learned that as a revenue account. So fees earned is sitting there. Also, on line 23 we have rent revenue. Then after rent revenue you see salary and wages what? Expense. Then advertising expense, utilities expense, repairs, there's all these expenses. Okay? So as far as the income statement goes, we are concerned with lines 22 through 32. Right? All my revenue and expense accounts. Got it? Good? Okay, alright, so here we go. What we have to do, the numbers are already done for us. We don't have to do a lot of thinking on the numbers. So there's no calculations or anything like that that's too crazy. What we're worried about at this point is form. Okay, and there is a standardized general form for income statement. So anytime you look at an income statement, whether it be at your company, your church, your civic organization, whatever, alright, it's always going to have this sort of general form to it. Alright, so here we go. We're doing instruction number 1. We're putting together the income statement. First thing we do is we have to have a title. Okay? 3 things go on the title. The first thing that goes on the title is the name of the company. And you can look in the instructions at the top. This is called the Watchdog Company. So that's going to be the first thing we do. Watchdog Company. Then we write what it is. Okay, we did this on the test with the trial balance. Okay. Then we write what it is. What do we do? We're putting together an income statement. That way, anybody who looks at this knows that you're looking at an income statement. Third thing is what? Remember? We got a date. Okay. On the income statement, the date is funny. All right. We don't just put a date like we date something. Okay. We have to do what? Income statement covers flow. It covers a period of time. Alright, so we have to take some cues here. If you look at row 3 on this Excel spreadsheet, you see what? For the what? Year ended. Okay, so we know that gives us our time context. Anytime we're dealing with an income statement, we have to have a time context. Okay, the time context here is 1 year. Alright, so what we want to say is for the year ended. So, for year ended, and their fiscal year ends on July 31, 2014. A lot of organizations, this confuses people sometimes. A lot of organizations, you have your calendar year, January to December, and then you have a fiscal, F-I-S-C-A-L year, okay, fiscal year. Very rarely is a company's fiscal year in line with the calendar year, okay, because it's, January 1 is not the only day that a business can open its doors. Okay? So usually what happens is, I suspect this company started doing business on August 1st of some year. That way, the 12 months after August 1st takes you all the way through July 31, in this case 2014. Okay? So fiscal years very rarely match up with calendar years. The important thing is what? This is still 12 months. Okay, when I see 4-year ended, I know I'm dealing with what? 12 months of revenue and 12 months of expense. Okay? So don't let that creep you out. You know, I know it looks weird 4-year ended July, but it's just fiscal year versus calendar year. All right? Now, what do we list first? Revenues. All right, so here we go. Ready? Revenue. We have 2 revenue accounts, and they are fees earned and rent revenue. So here we go. What I like to do is, on these financial statements, you have totals and subtotals. All right. So I like to go here and indent and just say fees earned and rent revenue, and then we'll have total revenue here. Okay, fees earned and rent revenue. And all I'm doing, remember, once you get to the adjusted trial balance, the hard work is done. All I'm doing is going over here and I'm picking up rent revenue, and I need to go all the way out, or excuse me, fees earned. I need to go all the way out to the adjusted trial balance. Okay, so fees earned is on line 22. Pick up the adjusted number, which is 368,100, 368,100, and do the same thing for rent revenue. Rent revenue is 1,000. 1,000. You see that? You see me? You with me? We got it? Okay. Don't pick up the unadjusted figure. All right. Don't go all the way out. Okay. Make sure you go all the way out to the adjusted column and pick up the correct figure there. All right. So total revenue over this 12-month period. I just add these 2 up, and I get $369,100. And that's my revenue section. We good? Easy? Alright, alright. If you know where to look, it's pretty easy. Alright, if you know where to look, they can throw you off a little bit. Alright. Now, there's no more revenue accounts on this adjusted trial balance, which means we got what? What goes on the income statement? Revenue and expense. Alright, expense comes next. So here we go. Same thing we did up here, we'll just write expenses. And there are a few, so forgive me, I'm going to have to write a little bit smaller here. Salary and wages expenses first. Salary and wages expense is $164,900. 9 times out of 10, salary and wages are going to be your most expensive thing to operate a business. And that's true here by far. Advertising expense. Advertising expense is $21,700. Utilities. And no, we can't just roll them all up anymore. You gotta be thorough here. 11,400. Repairs. Repairs expense was $88.50. Depreciation expense for equipment was $4,200. insurance expense. I don't know why they have this many expenses. I think you get the idea, but we'll play along. 2,500. Supplies expense. And thank you for playing along, by the way. Supplies expense. I'm not going to have this many on the test. 1,830. Depreciation expense on building was 1,600. And finally, always last, miscellaneous expense is 4,320. Remember, the reason that we list expenses highest, lowest, miscellaneous last on the adjusted trial balance is why I was harping on it so much for your test. You know, it has to be this way, is because according to GAAP, the proper way to show your expenses on the income statement is what? Largest to smallest, miscellaneous is last, okay? So go ahead and get that work done before we get here. We don't have to worry about order or anything like that. So here are all my expenses. I'll do the same thing I did up here. We'll put a little total expense. Total expenses. And we'll add it up. And we'll do, it's 221,300. 221,300. Now, just here's a couple of notes, just in general. All right. These, don't write this. Just watch. All right. These are not debit and credit columns. Okay? They're just what? They're subtotals and totals. Okay? So don't think, we're done journalizing, we're done changing the amounts in the account at this point. We've done all the journal entries, all the posting to the ledger. That's all history. Okay? This is simply what? This is presentation. This is presenting what we have done in the journal and the ledger. Okay, so we're not debiting and crediting revenue. That's done. All right, this is simply presentation. This is a subtotal column. This is a total column. All right, different people have different uses for financial statements, and the reason it's good to do this is some people just want to know what the income is. What's the bottom line? Alright, so I can look real quick out here and tell you what the bottom line is. Some people like what? Some people like the details. They like to get their hands dirty and get down here and look and nitpick and see what's going on. So, that's the reason we have this presentation. What am I going to get mad about on the exam? I'm not going to sit here and go, oh, well, Treadwell didn't do his subtotals and totals. That's not exactly what I'm looking for. Okay? What I'm looking for is, are all the revenue accounts represented? If I have two revenue accounts, are they both here? Are all the expense accounts represented? Are they presented in the correct order? Highest, lowest, miscellaneous, last. Okay? So if you end up with something like this is something that I see a lot. I don't count off for this, but it's kind of a slippery, dangerous slope to get on. And don't do this in your notes, but this is something I see sometimes. I'll see 369, 100, and 221, 300. I'll see something like that. All right. The danger there is that you do what? You just start adding up a list of numbers, so you double count everything. All right. So just sort of to make it easier on yourself, I recommend go ahead and throwing it out here in a total format. 221. 300. Now, here's the other note. I got my debit and credit side. Okay, so just think about this for a second. Credit increases the revenue account, right? Debit decrease. Debit increases an expense account. Credit decreases. Okay, we learned that third degree right here. And this isn't news to you. Okay, so you see what? these two act against each other, right? They're complete opposites. Okay? Revenue is money coming in, expenses is money going out, essentially. Alright? So, what you will see, and again, this is not something that if you don't do this on the test, I'm going to kind of, put a red line through it and say minus 10. Okay? It's not that kind of a deal. But I do want you to understand something. On a lot of income statements, what you will see is this. Around the expenses, you'll see parentheses. Which means what? It's a reduction of some sort. Okay? So here's all the money coming in. $369,100 coming in. Pile of $369,100 $1 bills. This is money what? That's money going out. So a lot of times what you'll see is parentheses around those to show what? Hey, this is coming in, this is going out, okay? And then you add a bunch of negative numbers, you get a really big negative number, so you do that. Okay? Again, I'm not going to freak out if, Pete didn't put the parentheses. Finally got him. He makes 100 on everything, got him that time. That's not what I'm going to do. Okay? But when you look at income statements and you look at formal presentations of financial statements, you kind of catch up on some trends. And I don't want you to say, when you're 35 years old and sitting on some board and looking at an income statement, I don't want you to say, that idiot never told me about parentheses. So there you go, telling you about parentheses. All right, now, we made it. Net income. All right, what do we do? To get net income, we take this number, subtract this number. All right, and we have this number called net income. Net income is $147,800. Which is not too bad. $147,800, and you did an income statement. Good for you. All right, any questions on the income statement? We okay? I don't want to belabor it, but I don't want to fly past it either. We okay? All right. Statement of owner's equity. So, income statement, statement of owner's equity, balance sheet eventually, okay? Relax, we're not going to get to the balance sheet today, so just chill out. Just look at the statement of owner's equity, and that'll be that. All right, so statement of owner's equity, same setup as over here as far as the title goes. The only difference is, instead of writing income statement, we're going to write what? Statement of owner's equity. So here we go, watchdog. Company statement of owner's equity, and for year ended July 31, 2014. Okay. Now let me just throw the whole thing at you, and then we'll come back and we'll talk about the individual components. All right? There are 5 lines on the statement of owner's equity. Just 5. Okay? Here they are. I need, what's the owner's name? Hickman. Hickman Capital. Beginning balance, additional owner investment, net income, Hickman drawing, and then Hickman capital ending balance. 1, 2, 3, 4, 5. -1 to grade. Looking for 5 things. One of them's not there. -1. All right. Let me say this before we jump into this. I've got to get this right to get my balance sheet right. Okay, the thing about this test is this. You sail along, you do the income statement, you do the statement of owner's equity, you go through, you do the balance sheet, and you're just sitting there and you're just cruising. Okay? And then there is this massive check on the balance sheet. Alright? Assets, we're going to put the assets over here, then the liability and equity over here, and assets and liability and equity are supposed to match each other. They're supposed to be equal. Remember, that's one of the first things we talked about. Okay? When it doesn't work out, and it's not going to work out for probably half of you on the exam, okay? There's this massive freak out, okay? Because you've done all this stuff. You've done your adjusting entries, you've gone from unadjusted trial balance, you've done the adjusting entries, you've made the adjusting trial balance. From that, you did this, from this, you did this, and from this, you did your balance sheet, okay? And assets say 1,000, and liability and equity says 500, and you go what? Oh my gosh. Okay, I either messed up here, I messed up here, I messed up on my adjustments, and that's a lot of work, okay, to find stuff, so you cruise along, and at 11:45, you get down here, and the assets and the liability don't work out, and you think you missed the whole thing, okay? Well, you might have, but you might not. It could be a very little thing that you missed that you didn't get right. 90%, okay, so out of the half of you, so this side, I don't know, this side's probably good. Alright, it doesn't matter. Alright, so out of the half of you that's going to get to the end of this thing, and the assets and the liability and equity are not going to equal each other. 90% of those, so, these back rows here, alright? 90% of those made the mistake right here. Statement of owner's equity. Okay? So, you don't have to freak out and go all the way back through all this, and make sure that everything is, the mistake is probably here. Okay? So, just take heart, accounting 201 student. If you get there and you got 5 minutes left in class, there's probably something here. Okay? So, this one it looks fairly innocuous. Just take your time on it. Okay? And make sure that you get it right. Alright? So, here's where the rub comes from. This number right here is the most missed. Alright? So, out of the half of you, they're going to get to the end and it's not going to balance. Out of the 90% where your mistake is here, 90% is going to miss this number. Alright? So, Hickman Capital beginning balance. So think with me here. Think about this a little bit. This covers what? This covers a year. Right? Okay? And the year ends when? So here it is, 7/31/2014. That's the end point. I need what? I need the beginning. Alright? So the beginning is what? The beginning is back there. Okay? So here's how I get my beginning date if I'm given the end of a fiscal year. Go 1 day forward. Okay? So here we are. 1 day forward is 8/1/14. And then what? From this date, go 1 year back. And that's what? 8/1/13. Okay? So we had all of August 2013. August, September, October, November, December, January, February, March, April, May, June, and July 2014. That set of 12 months constitutes my fiscal year. Okay? So, when I say Hickman Capital, beginning balance, I'm talking about what? I'm talking about the beginning balance on this dude's account when? August 1, 2013. Okay? So, beginning balance, August 1, 2013. Here's the problem. When I look at the adjusted trial balance, it's for what date? It's for that date. Right? Okay? When I look at the unadjusted trial balance, it's for what? It's for that date. Alright? So, here's where I got to do a little bit of thinking. Here's what I know. Alright? Ted Hickman Capital. According to my adjusted trial balance, you see it? It says what? 203,100. You with me? You see it? Okay? So that looks like this in ledger world. Okay? And we know that these numbers came from the ledger. The numbers in ledger came from the journal entries. Alright? So, in ledger world, Hickman Capital looks like this. 203,100. And that's what it looks like on that date. Okay? Here's your tendency. Your tendency is to say, oh great, alright, 201,300 goes here. And that's not necessarily true. Alright? We have to ask ourselves one question. Alright? These two, think of them together in tandem, and I'm going to ask you to change something in the instructions. Here, you see instruction number 2? It says, prepare a statement of owner's equity for the year ended July 31, where it says no additional investments were made during the year. You see that? Change that to 15,000 in additional investments. Alright, again, this is instruction number 2. On page 192, problem 4-1A, it says, prepare a statement of owner's equity for the year ended July 31. It says no, this is what the actual instruction says, it says no additional investments were made during the year. Change it to 15,000 in additional investments. Okay? So what we have to do is this. We've got to hit this number with these two. These two lines have to add up to hit this number. Okay? So if I do have additional investments, which I do right here, you are going to have it on the test. Okay? What you have to do is this. You have to take this number that you're given, 203,100, 203,100, and subtract out the additional investment of 15,000. Okay? So here we are, 203,100 minus the 15,000. Okay? And I get this. 188,100. Okay? Here's what I'm doing. I'm giving you history on how we got to this number. Okay? What I'm saying is this. Yes, 203,100 is the balance according to this. But what happened is this. I started the year with 188,100, and I did what? I invested an additional 15,000, which goes here and adds up to this. Alright? So your first two lines up here, this should say 188,100. Additional owner investment, 15,000. Okay? Once we get those two lines, the rest is pretty darn easy.
So, in pretty much on your test, where it asked us, where you had us change it, you would actually state that number?
Yes. Well, all you do to make sure you have it right is add these two numbers together, right there, and it should come back to what?
2.
It should come back to the number. It's not always going to be 203,100. Okay? It should come back to the number that is
Number you
on the
started,
trial balance. Okay?
started out with.
It should always come back to that number. We'll pick up there. We'll finish out the statement of owner's equity and hopefully some balance sheet on